Okay, so I'm back with another video, guys. This one is very, very interesting. This is current time right now. I haven't placed a trade here because I'm currently at work, but I just want to point out a few things. The market works in fragments. What do I mean by fragments? Well, if we look at the overall trend, we're not including all of this right here. We're including recent price action. We don't have to include January of this year. That's nothing that we care about right now. We care about recent price action. What makes sense? So if you look to your left, we have this huge range of, I'm sorry, 208 pips. Now, this is a very important range because, like I said, it's the most recent, which gives us an idea of where price may go. However, we don't even acknowledge this range right here. We're more focused on what's going on as far as a trend. When you can identify a trend, it's never going to be perfect, but if you can clearly see a trend, it's a trend is your friend when you use it in the correct way. So just like in the previous video, we have this overall trend, which is this line right here, which basically is this trend right here, the larger trend. But within that larger trend, we also have minor trends and minor retracements, which could be on the H1, the M30. Let's do the H1. The H1 is a good one. Within this larger, maybe H6 trend, we have this H4 trend, H4 trend, swing low, swing high, swing low. So the idea is to not look left. We don't really care too much about what's going on here. We care about the most recent. The lower you go, the more recent you want to stay. So if we see a break of structure here on this retracement, because we know this is a confirmed trend, this retracement right here is the corrective movement. It went to mitigate these imbalances right here, and then it broke structure. It broke structure to the downside. So if we know it broke structure to the downside, not only did it break structure here, it broke structure on the higher time frame as well. And we have these equal highs, which are areas of liquidity. So with that in mind, it gives us a reason to have a trade idea in this general region because this leg was sponsored by this move right here, by this buy before you sell. So what you can do is just place, see, I think that's a sell. Yes. 11 pips should be fine. And you just patiently wait. And another thing I want to point out is this is an 88 pip, 84 pip range versus working with a 210 pip range. This is less of a headache, especially when you know what's going on. All we know is this is just a retracement because the market wants to go south. It wants to go bearish. We don't know for sure if it will go bearish, but that's what it's looking like from our analysis and from what's transpired. We see this clear trend. We see prices taking out these lows. We see even though all this bullish activity is going on, it could not surpass these highs. And now, since we have this corrective movement, the structure has been broken. This tells me this is an area I'm focusing on. This is all I care about. I don't care about all this. I don't care about what's going on over here. All this is it doesn't matter. Only thing that matters is, were my rules met, and do I see legitimate reasons to enter a trade in this region? This would have been a good area as well because it broke structure right here. But say you lost that trade, just go back and tell yourself, why did I lose? Maybe it's going back to another order block that makes more sense, which would be here because it broke structure here. Just like in this example, larger downtrend, corrective movement, and then we have our confirmational range, which is this right here. I always make that green. I think I made a blue over here, but I'll always make that green because green means money. Let's try this green right here. That's green. That's green enough, right? So you can place a trade, a sell limit right here in this area and just have a TP somewhere over here. So this is a nice one to study. I don't know if it's for sure going to go this way, but we'll see.